Good morning, everyone. Good morning, everyone. It is Monday morning, August 11th, 2025. It is so good to see you all this beautiful and amazing Monday morning here in Austin, Texas. I hope you all had an absolutely amazing weekend. I hope you had a lot of good family time or personal time, alone time, pet time, client time, whatever. Just hope you had a great weekend. Lots to go over this Monday morning, 4-hour Monday morning touch point. Lots going on in the market right now. This is a huge week for the economy, huge week for rates. So we're going to take a look at absolutely everything that is affecting the market, everything that may affect the bond market. Lots going on. Thank you so very much for joining. Really do appreciate it. And we're going to go ahead and get started. Let's really hit it hard. I want to make sure that we have plenty of time to get any questions answered that you may have. So we're going to get the new listing to pending ratio here updated. First thing we're going to do is we're going to go a little bit backwards in time, and we're going to see if we have to update any of the previous information for the previous few weeks. And I want to remind you that this is for the 6-county area. We are always focused on the 6-county area. And we're going to start by updating that number, that 373, and to see if there's anything new that came or that went under contract. We know that agents are really bad when it comes to updating information. So we have to go backwards in time a little bit to make sure that we capture all of the properties that went pending. And this number is going to go up. It's going to go up from 373 to 376. Let's keep on going. We're going to keep on going backwards just to make sure that everything is fully updated. Give me one more second so I can just get this up and running. We are then going to go from the 21st to the 28th. That's going to be 476. That doesn't change. 14th through the 21st, that goes up to 518. And let's go from the 7th all the way through the 14th. That's going to be 481. I'm going to keep on going just a few more weeks just to make sure that we capture everything. That's 466. That's 528. Good. We've got everything updated. Let me go ahead and just take a look at the active under contract also. I want to make sure that nothing is left. We want to have accurate information. Active under contract, it's all perfect. And now we can update the number of new listings that came on the market over the past 7 days. Keep in mind that this information is going to lock at 11:59 p.m. tonight. But so far, we are looking at 914 new listings that have come on the market from August 4th all the way through right now, this very second. 914 new listings, 6-county area: Travis, Williamson, Bastrop, Hayes, Caldwell, and Burnett counties. Let's take a look at price increase. We are looking at 215 price increases. The week before, we hit 285. We're at 215 right now. Price decrease, we're at 2,098, which means the percentage went up a little bit. The previous week, we were looking at 89%, and that's going to be the spread, the price movement spread between anything that could go up or down. Last week or 2 weeks ago, it was 89%. We are back up to 91%. Let's take a look at back on the market. We're at 184 back on the market, which means the percentage is going to go down to 20% back on the market. And that's going to be the lowest percentage going all the way back to June 16th, 20% back on the market. Active under contract, we are looking at, 392. 392 active under contract. This is where you get to guess. This is where I need 5 volunteers to go ahead and give me your guesses. Melanie is going to start us off at 296, followed by Sonia, 222, Harold at 245. We've got 3 down, a 2 to go. Go ahead and give me some guesses. We've got Kristen coming in at 325. 5 and one more person to write down your guess on the number of pending. We've got 296, 222, 245, 325. One more person, write down your guess. We're not going to move forward until I get one more person writing down a guess. One more person. Kristen, the last one at 325. Okay, thank you, John D. We've got 300 from John D. Let's go ahead and click here. Oh, okay. We've got, okay, the lowest one was Sonia at 222. And I am sad to report that it was lower than that. It does have a 2. But we are looking at 216. 216 pendings. From August 4th all the way through right now, 216 pending. We are starting off at a 0.55 ratio. And what that means is that out of 100 properties that came on the market, 55, not 55 out of the 100, these are ratios. But the ratio is really half. For every 2 properties coming on the market, one of them is going under contract. For every 100 properties coming on the market, 55 are going under contract. Now we can see that the ratio got up to a 0.84 3 weeks ago, dropped down to a 0.70, and we are right now at a 0.55 ratio. It's a low ratio, which means we are not, I repeat, we are not going to beat the ratio from last week when we had a 0.70. It's going to be south of that. It's going to be something closer to the 0.62, to the 0.67. We're not going to get up to the 0.70. Let's take a look at some comparison, because 2 weeks ago, we now broke the positive trend that we have been seeing going all the way back to the end of June, where more properties were going under contract this year compared to last year. And that was a very positive trend. Rates were improving. Properties were more attractive. And we broke that trend this past July 28th. We now saw an 8.6% drop on the number of properties going under contract 2 weeks ago compared to exactly the same week last year. Right now, we are down to 38.4%. We know this number is going to improve dramatically, but it is going to be negative. It's not going to beat last year. The good news is I don't think we're going to beat the new listings either, because we would need 120 new listings entering the market between right now at 10:08 a.m. all the way to 11:59 p.m. tonight. I don't see that happening. So we're going to have less new listings entering the market this past week compared to the same week last year. So that's the good news. Now, we've been on the positive side on listings going all the way back to April, and we've been averaging 7.8% increase. If I were to look at all of these numbers and go back, 7.8% average increase week over week on the number of new listings entering the market. This is going to be negative compared to last year. But we will also be negative on properties going under contract. That's going to be the tough part. Now we can see that last year, the ratio also peaked this same week, end of July, at a 0.90. And then we dropped down to 0.82 and then 0.79. And we are noticing the same trend this year. We peaked at 0.84, then down to 0.70. We're at a 0.55. This 0.70 is going to go up to about a 0.75 as agents update listings and update the status of the pending. This 0.55 is going to go up to the 0.68, 0.69. I don't think we're going to get to 0.7. I don't see it happening. But we are slower compared to last year, unfortunately. Let's take a look at the monthly, and let's go ahead and start updating some monthly. We're going to go to July, make sure that we have everything perfect. That comes out to 1769, 1769. Let me take a look at June really quick to make sure that it's all accurate. We've got 1833. That's perfect. 2 months in a row with a 0.72 ratio. Not bad. But last year it was 0.77 and 0.75 or 0.71, 7775. June, July, August. So we did beat June. June of this year was a 0.72 ratio. June of last year was a 0.71 ratio. So June of this year was better than June of last year. July, though, we went back. July of last year, 0.77. So far, July of this year, 0.72. Let's start updating the August data. New listings so far, the entire month of August, 1270. Price decrease or price increase, 242. Price decrease, 2645. 92%. Better than the past 3 months, 92%. That's improved over the past 3 months. That's a good thing. Now, one thing to keep in mind, take a look at this percentage drop. And what I do here is I take a look at all of the price drops. Last month, 9,133 price drops. Isn't that crazy? 9,133 price drops. 59% of all active listings have had at least one price drop. So there's that 9133, which means when I divide that 9133 by the number of active properties currently in the market, I get this percentage. This 57% is going to be the highest number going all the way back to September of 2023 at 59%. So we reversed course and we're now at the highest since September 2023. Let's take a look at back on the market. We're looking at 280, 22% back on the market, a little bit higher, and we also broke the trend. Higher than August of 2024. Now let's take a look at active under contract. Ooh, man, I have to take a look at the date. It's August 11th. Y'all, a third of the month is gone. 573. Oh, okay. Let's take a look at the pending. Oh my gosh. Oof. Okay. Wow. We're 11 days into the month. We're a third into the month. We're at 315 pending so far this month. It's August 11th. 315 pending. So far this month, we're looking at a 0.57 ratio so far this month. 0.57. And let's take a look at withdrawn really quick. We've got 384 withdrawn. That number keeps on going up. And then let's take a look at expired, and then I'll update the sold. I've got to go to a different screen to update the sold. Y'all, to put in perspective, in 1 year, we've had 15,805 properties either withdraw or expire. 15,805 properties. Let us start updating the sold. Sonia said, hug your clients. Ain't that the truth? That is just amazing. Let's take a look at closed. So far this month, 6 county area, we are at 566. Let's make sure that we have the accurate information for last month. This is going to be 2563. That's perfect. Let's take a look at the previous month. We're at 2960. I'm just going to go one more month just to make sure it's accurate. And we were at 3109. See, that went up 3109. Now, which means now I have to go 1 month before that. And this is going to be 2634. Perfect. What percent are also listed for lease? I don't have that number. And the reason why is because you have to export all the listings and you have to export all of the PID listings. And then you have to cross-reference the PID for all of the active on the residential side, plus all of the leases. If I were to guess, I would say 25% if I were to guess. But if you send me an email sometime this week, I can't promise you exactly when. I'll go ahead and just manually do that. Send me an email, and what we can do is we can go over that either Wednesday, Friday, or the following Monday. But I'd say 25% are also available for lease. Lease just hit another record high this morning. We've got the highest number of lease properties currently in the market than any other time in MLS history. This morning broke a new record on the number of lease properties currently on the market. Though a lot of accidental landlords out there. So really interesting, you all, that so far this month, we are 11 days into the month, and we've got 315. We've got 888 properties under contract for the first 11 days of the month. That is amazing. Let's take a look at the year-over-year comparison. I want you to ignore August. Pretend like August does not exist because we're only 11 days into the month. Let's focus on July. Let's only focus on July. So here you go. Here's July. I want you to focus here. Year over year, 16.3% increase in active listings, 12.2% increase on the number of new listings. We had 485 more new listings July of this year compared to July of last year. 199 more price increases, 1,467 less price drops. But here's the good news. We had a 5.1% increase on the number of pending deals. And that's really encouraging. That's very encouraging. We had 191 more pending deals July of this year compared to July of last year. We have been outperforming last year 3 months in a row. If you look at the number going all the way back, and let's go August to the end of July, we are plus 139. That's good news. So we've had 139 more properties go pending compared to, now, when you look at it as a percentage, it's just an absolute fraction of a percent. It's a very, very small percentage. But I will take that gain all day long because we've been negative for so long. Last year, we were negative 280. The year before that, we were negative 11,298. So I will take the gain all day long. So that's the good news. Interesting to see what's going to happen this year because we only have 888 properties that are currently under contract that have gone under contract this month. When you look at last month on the closing side of things, we were down 8.7%, which is really surprising because we've been positive on the properties going under contract. But all of a sudden on the closing side, we're down 8.7%. I would not have expected this. This tells me that we do have that increase in properties that are falling through, whether it's financing or whatever the case might be. And then we can see that 245, this is going to be that year over year comparison. We've had 245 more properties withdraw July of 2025 compared to July of 2024. And I mean, that's been positive. We're up 1,146 compared to the prior period. And on the withdrawn, or that's what the withdrawn, on the expired side of things, that's 1,339. So the expired, we've been on the plus side for a very long time. The last time we were negative on expired was all the way back to May of 2022. That was down 4. We've been on the positive side since May of 2022. As you know, all this information is going to be updated. You're going to receive an email later on today with the entire new listing to pending ratio so that you can look at all of the amazing charts and graphs and everything else. I do have a few graphs that I want to go over, but right now what we're going to do is we're going to talk about rates. Let us see exactly what's going on with rates. Let me go ahead and just download today's rate sheet so we can go over what Robert has provided. And we're exactly where we were on Friday. We're at 6.75. We are 6.25 on VA. That went up by 1/8. We were at 6.125 on Friday. Otherwise, everything stays exactly the same. But this is going to be a huge, huge week for the bond market. And the reason why is because tomorrow we start off the day at 5 a.m. with the National Federation of Independent Business Small Business Optimism. They're expecting that number to come in exactly where it was in the previous. It's going to be interesting to see. That's going to be at 5 a.m. That's where it starts. But at 7:30 a.m., we've got the massive number, the number that everyone is waiting for. That's going to be CPI, Consumer Price Index, also known as inflation. And that is going to have a huge effect on the bond market. You can see behind me right there that we do have a fairly decent start of the morning. We are down by 1.2 basis points on the bond market. Not enough that would justify a repricing. That's not going to happen until tomorrow. If for some reason inflation comes in hotter than expected, forget about it. Rates are going to go up. The bond market is just going to get absolutely just killed and rates are going to go up. And if for some reason it comes in better than expected, well, the market is almost expecting it to come in worse than expected. So it's going to have a overcorrection and we can expect rates to go down. A huge day tomorrow. And that goes right into Wednesday because on Wednesday, we've got more information that's going to come out. We've got a lot of mortgage information coming out, mortgage applications. We've got a lot of economic indicators. And then Thursday, there's a little bit of a pause on Wednesday, but then Thursday is going to be the next big data dump. And that's going to be PPI, Producer Price Index. That's going to be the input side of inflation, and that comes out on Thursday at 7:30 a.m. And then, of course, you go into Friday, and we've got more inflation data. We've got import pricing, export pricing, retail sales, manufacturing production, you name it. We've got the University of Michigan consumer sentiment, inflation expectation, consumer expectation, current market conditions. So it's going to be a huge week for rates, and we will know by tomorrow morning what happens. So what would be my advice for clients? It's going to be lock and float. It has to be lock and float. Lock in what we know now, and then let's go ahead and just float the rate. If for some reason we have really positive inflation numbers tomorrow morning, and rates go down, hopefully the lender, and I do know that Robert offers this, but the client can choose whatever lender they want. But most lenders do a 1/4 point float down. Oftentimes, Robert is able to offer a 1/8 of a point float down. So if for some reason rates backtrack a little bit, either 1/8 or 1/4, then we can re-lock in that client. But if for some reason we have really bad inflation numbers, let's just say that there is a horrible effect on inflation from the tariffs, and it doesn't come in at 3%. Let's say it comes in at 3.2, 3.3%. Forget about it. It's going to be really bad. We could very well wake up tomorrow morning or I'll be awake. Some of you could very well wake up tomorrow morning in an environment closer to that 7% mark. So it's a huge day tomorrow for rates. Now, I will say this. I'd say the market is expecting inflation to be an issue. So if it comes in right at expectation, then I expect rates to the bond market to improve a little bit. Is it going to improve to the point that's going to cross a repricing level? I don't think so. I think it's going to be close to that, 6.75. We could very well get down to the 6.625, but nothing spectacular. These are market rates right now. And when I say that rates are going to improve substantially, I'm talking about like 6.5. I'm not talking about anything lower than that. These are market rates right now. This is what the market commands. These are the rates. Any questions about rates? Any questions about what is going on with the overall market? As a matter of fact, I'm going to show you something here really interesting. Builders are getting desperate. Have you noticed how builders are getting desperate and they're offering insane deals? Take a look at Taylor Morrison right here. We have an offer. 0 interest payments for 7 months. Skip the interest. Keep the savings. Let us pay your interest for the first 7 months of your mortgage and put your down payment back in your pocket. Wow. Amazing. It has to be an FHA loan. Just incredible. But that's what builders are doing now. Builders are having to get creative. So here's a situation where, there you go. That's what the builder's doing. They absolutely have to be creative, and we're noticing more and more of that. Okay, we've got a question about the Fannie Mae Freddie Mac IPO. Go for it. What is your question? You can unmute yourself. You can type it. Whatever works for you. Go for it.
Is it bad? I mean, why? Good? Is it bad for real? I don't get it.
Well, I mean,
why is it public?
well, you're getting cut off really bad for some reason. Can y'all hear?
Can you hear me?
Yes. Do you mind repeating the question?
So I don't understand. I mean, is it why it's going to happen? What's the benefit? Is it going to be a positive thing for the real estate market or a negative for the real estate market?
That's a very good question. Well, one is, I would say that it probably won't happen until later 2025, even though there's some reports that they're pushing it to happen really even this month. I mean, we're already in August. It is going to be huge, right? It could very well be one of the largest IPOs in history. So it's going to be interesting to see how that plays out. I would say anything that gets, real estate and the government is so intertwined right now, deeply intertwined. And I'm a firm believer in products like the VA. I've purchased 3, maybe 4. I've purchased 4 properties using my VA benefit. And the first property that I purchased, had I not used my veteran benefit, I probably wouldn't have been able to get into that property. So I'm very grateful for products out there that allows people to purchase a property, whether it's, Fannie Mae or whether it's, something that's government backed that provides not only liquidity, but also confidence for investors and also FHA. So there is a place for that. And I'm grateful for that. Where there is no place for that is where all of a sudden the government is taking additional risk because they've got the printing press. And then that becomes the subprime. That becomes the product that is being lent out to people that statistically will default on that specific loan. And we're seeing that with FHA right now, where the default rate on FHA is exponentially higher than the default rate for conforming loans. Now, but even conforming loans are being absorbed by Freddie Mac, Fannie Mae, and this is one of those quasi-government sponsored enterprises, a GSC. And then they have to provide remittance to the government. If they make money, they send a portion of that profit to the government. But then if they don't make money, well, then is the government solely responsible for absorbing all of the risk associated with that product? And if the answer is yes, they are, well, then that basically means unlimited risk. So by spinning off Fannie Mae and Freddie Mac into the private sector, will it increase underwriting guidelines? No doubt, it will. And I'm not going to say that that's a bad thing. As a matter of fact, I would even say that that could very well be a good thing. Do I want zero government involvement? Oh, no. I want healthy regulation. I don't want to live in an environment with zero regulation, but I also don't want to be in an over-regulated environment that actually costs more money to underwrite a loan because there's no incentive to make the system and the process more efficient. Quite the opposite. Too early to tell on whether or not it's going to have, dramatic effects in real estate. I would say this. I'd say that we're in it for a real estate market correction. Either way, doesn't really matter. We're in it for a market correction. We've certainly experienced that already. And if they can spin this off the government and make it a publicly traded company, I'm personally for that. I'll just say that. I'm personally for that. I can't find one thing that becomes more efficient under the government. If you can, let me know. Like I am all ears. Like if you can say like, hey, this right here is way more efficient under the government, man, I am all ears. I am a learner and I want to learn. I'm
Where is
still
all that?
searching.
Where are all those billions going to go? Like you said, this could be a huge IPO. Where's all that money going?
Well, there is no money. That's the thing. When you scroll down right here and you go to Fred Economic Analysis, I actually have a chart right here that talks about earnings remittance. And you can see earnings remittance due to the U.S. Treasury refers to the amount of money that government-sponsored enterprises, such as Fannie Mae and Freddie Mac, must pay to the U.S. Treasury each quarter. These enterprises generate income through various activities such as buying and selling mortgages and are required by law to send a portion of their earnings to the Treasury. Do you want to see the graph? Let's see the graph. Yeah, there's the graph, right? Like we're at and this is millions of dollars. So when you look at 240,000 million, like that's 240 billion. So the sucker has not been profitable since 2022. So that's the trick. Like there is no money. It doesn't exist. The Ponzi scheme is over. It does not exist. There are no billions of dollars in profit. They've been running at a massive loss for forever, and it's accumulating to the point where there is no money. And this is straight from the Board of Governors, right? This is not my chart. I could care less about this stuff. This is straight from the Board of Governors. So there you have it. So now we'll see what happens. It could very well have, could have a positive effect, a negative effect, kind of see what happens. I'm indifferent to it. If I had to say like, well, what do you wish would happen? In all honesty, I'm completely indifferent to it. I'm not for it. I'm not against it. It's like I'm absolutely indifferent to it. So all I know is that having it under the government, and this is, by the way, regardless of administration, I am absolutely neutral of this crosses. I could care less. Like I'm just not a fan of inefficiency. That's just not what I'm a fan of. But it's going to be an interesting IPO. I'll say that much. Good question. I do think that it would raise mortgage costs. I do think that especially in the short term, it would raise mortgage costs. I don't see why it wouldn't raise it. I'm not for that. But if in the long run they can make the process more efficient, then hopefully it'll help. But I'm a skeptic. Very good question. Very good question. But you can go right there. You can go to Fred earning remittance due to the U.S. Treasury, and there you have it. There's the beautiful profit that doesn't exist. Is there a market for furnished or partially furnished leases? Okay, good question. What's the percentage that are furnished? Is there a benefit to rent furnished? No idea what the percentage is. That's not a metric that I pull. What you can do is you can do that on the MLS. You can just search furnished and furnished on the MLS and just divide up the furnished on the total amount and see what the percentage is. If I had a guess in our market, I would say it's going to be well under 5%, maybe something as low as 2 to 3% are going to be furnished. So if you take a look at the 7,000 active listings that are currently in the market, I doubt that there are more than 150 to 200 furnished leases. We don't have a big market for furnished lease listings right now. We are not a corporate relocation market right now. So I don't see a huge demand on that. The other thing is furnished leases became very popular during the building frenzy that happened from 2020 to 2022, latter part of 2022, where people sold their homes. They knew that they were going to sell it quickly, but their new home wasn't going to be ready for a few months. So they just needed a place just to live for 3-4 months, and they were willing to pay premium price on that furnished product. That is not the case right now. Quite the opposite right now. So I will say that the demand for furnished has been minimal at best, but close to non-existent. And therefore, the landlords are not getting a huge premium on the furnished listings. Those tend to be short-term, not long-term. People are looking more for long-term right now, not for short-term, simply because the inventory is so plentiful right now. So that's my say on that. Does that help? Absolutely. Good question. Let's go ahead and take a look at the overall stats. We have 17,609 active listings currently in the market. The previous high was 18,146, and that was on June 30th. 59%, exactly 59% of all active listings have had at least one price drop. We do have 14.7% more active listings currently in the market this year compared to exactly the same day last year. The cumulative new listings, we're down 0.7% on the cumulative new listings, but it is the 11th of the month. That number is going to go up. We only need 250-ish or so new listings entering the market for us to have a higher number of cumulative new listings compared to last year. We're going to reach that in 3 or 4 days. So we're going to have a record year on the number of new listings. On pending listings, this continues to be the really encouraging part compared to last year, is that we continue to outperform pending listings compared to last year. And we continue to see a little bit of an increase compared to last year. This time last year, the number of pending listings was going down, and here we are up a little bit over the past 5 days compared to last year. So that is a huge silver lining that we have in today's market compared to last year, is more properties are going pending compared to last year. And this just takes a snapshot of the total number of pending transactions. When you look at the cumulative pending, and keep in mind, this is a close snapshot. We were down for the entire first part of the year. For the first 2 quarters of the year, we were lagging last year. This recent positive, it's really recent. It's only in the past, 2.5 to 3 weeks that we've been positive. We're just hoping that the momentum will continue. When you look at all of the cumulative pending, everything that's gone pending, we are lagging 10.4% compared to last year. The recent positive is just over the past 3 weeks. On the activity index side of things, we are currently at 21.3% activity index. This time last year, we're at 19.6. Last year, we're at 21.3. Right now, we're at 19.6. So we are down on the activity index because, of course, we've got more active listings. The activity index on new construction is at 27.31. On resale is at 16.69. And you can see that the activity index for Manchac, Killer, 37.5. But take a look, Butte and Kyle are no longer next to each other. We now have Lockhart in between Butte and Kyle. Lockhart shoots up to 29.3. We've got Butte at 28.8. And then we've got Gerald. That drops down to 26.4. Last on the list is Smithville. Ridiculous. 3.7% activity index. That basically means there's nothing going under contract in Smithville. If you get a listing agreement in Smithville, Make it 2 years. You've got the activity or the new listing to pending ratio so far this month, currently at a 0.55. We have to go all the way back to 2003 to get a July new listing to pending ratio that is lower than a 0.55. We know that this number is going to go up, so we are going to be 2003, and there's that 0.55. We have to go all the way back to 2003. That matched at 0.55, 2002, 0.52. It's not going to stay at a 0.55, but my expectation is that it's going to be anywhere from 0.65 to 0.68. So we have to go all the way back to 2010. When this is all said and done, when we're revisiting this information next month, closer to September 11th timeframe, this 0.55 is going to be 0.68, 0.67. And that's going to be the lowest one going all the way back to 2010. Number of cumulative new listing to pending difference. We're at 7,018, which means that we've got 7,018 more properties that were new on the market compared to properties that went pending. And you can see that the new listing to pending ratio for the entire year so far is at a 0.69. That's for the entire year. And there's the graph for that. Let's take a look at inventory. Months of inventory at 6.29%. That is going to be an increase of 15.7%. And we've got the top 3 cities with the highest inventory: Dale, Smithville, Spicewood. And then the cities with the lowest inventory: Manchac, Hutto, Lockhart, Buda, Cedar Park. And there's the breakdown on inventory. Now, take a look at the increase in inventory. Number 1 city year to date with the highest increase in inventory is going to be Cedar Park. We started off the year at a 1.93 months of inventory. We're at 3.96, still very healthy, still in a seller's market, but that is a 104.6% increase year to date in inventory. And then you take a look at year over year. Jarrell from 5.21 this exact month last year, all the way to over 11 right now. Anytime you see the months of inventory at 11, it could be 11, it could be 100. I just cap it at 11 because if I don't cap it at 11, then all the charts look super wonky, so I just cap it at 11. When you go to the months of inventory detailed analysis, you can get the exact months of inventory, but outside of that, like when you click right there on Smithville, so, we've got 21. So we got 21 months of inventory right there. So, just take a look at that. You can just click on that and get the specific analysis on Smithville or really whatever municipality you're looking for. We are expecting 2,823 properties to close this month. It is a projection, but we're usually pretty spot on in our projection. And we are down 4.4% on the cumulative sold properties from January all the way through August. When you adjust it for population, we're looking at 806 adjusted for population. That is 6.7% drop. Adjusted for population, there's really no way to spin this. This is going to be the second worst month on record. When you adjust it for population, we have to go all the way back to 2009 to get a smaller number of sold properties per 100,000 people. When you take a look at the sold per 1,000 agents, the good news is that we are slightly better than 2023. That is the good news. The bad news is that 2023 was the worst year in 25 years. When you adjust it for the number of realtors. And the prices are skyrocketing. We are looking at a $49,000 month over month increase on the average sold price. I get it. It's only the 11th. More expensive homes do close at the beginning part of the month, but that is a shockingly high number. But on Saturday, that number was like $65,000. So that number is going down already. But so far, when you look at the properties that have closed so far this month, the average sold price is $624. Are we going to go negative? That's really the big unknown right now. We're not going to go negative on the year over year. There's no way we're going to be positive on the year over year. As a matter of fact, it's going to be a very healthy positive on the year over year. You take a look at the average sold August, it was 569. I don't think we're going to cross. There's no way we're going to cross that. No way. So it's going to be positive on the year over year. On the month over month, I'd say it's going to be positive, but it's going to be in the thousands of dollars, not the tens of thousands of dollars. On the median, we are positive both on the month over month and also on the year over year. But that has a lot to do with not only the bifurcated nature of the market, is that more expensive homes sell in the first part of the month, but we just have more expensive home selling period as compared to the lower 25th percentile. That's going to be that percentile that's experiencing the most resistance, the most price correction, the most number of sales, the drop in the number of sales. That price point is just really taking it for the team, whereas the upper 25th percentile is outperforming the bottom 25th percentile. And I can show you that right here, that on the price per foot, the upper percentile is actually up 3.5% on the price per foot, or on the overall price. The price per foot, that's down by 2.8%. So on the raw price, the bottom 25th percentile is down 0.3%. The top 25th percentile on price is up 3.5%. That is a huge gap. It's orders of magnitude more as a percentage. So the upper 25th percentile is far, far outperforming. What is the price that's included in the top 25th and bottom 25th? Well, here's the price. So the overall, when you look at all of the properties, the bottom 25th, the last year was $329,998. This year it's $329. And then the top 25th last year was $620. This year is $641. That $620 to $641 accounts for that 3.5% increase. City of Austin, it's up 9.7%. So last year, the top 25th percentile started at 811,250. This year it starts at 890. I mean, it's a 9.7% increase in the start of the 25th percentile in 1 year. That is a massive increase. So City of Austin, top 25th percentile, is doing extremely well. Lago Vista doing well. Liberty Hill. I mean, these numbers are amazing. Marble Falls, just incredible. Doing extremely well. Wimberley crossed $1 million on the top 25th percentile. Just amazing. $1 million. But look at the number of sold properties. Only 22 sold so far this year. So not that many properties. But the 25th percentile doing extremely well. Here is a noteworthy thing that we just noticed. Forever, we had 18 cities that went down on price, on the median sold price year over year, and 12 cities that went up. We now have 11 cities that went up, 19 cities that have gone down. So that's a new number that we've noticed. One additional city was added to the city that actually went down on price. And we've got Lockhart right there. So that's still up, but we've got Round Rock is now down 1% year over year. And let's see what else. We've got the ones that are down. We've got Bastrop, Buda, Burnett, 18.1. Cedar Creek, Cedar Park still doing very well. Third best city in the area. Dale. Then we've got Dripping Springs down. Elgin down 1.7. Georgetown down 1.4. Huddle down 6.6%. Huddle. That's a big drop. 1.6% Gerald, 5.8%. Kyle, which is amazing. I mean, that's the 23rd best performing city out of 30 cities. And then we've got Leander is down 6%. That's not great. Even though when you go all the way back to 2000 to 2025, this is the second best city in the entire area, but it's now the 24th city from 2024 to 2025. And this is called the absorption ratio. We simply take the number of sold properties and we divide it by the number of active properties. Sold to active ratio, also known as the absorption ratio. And you can see that right there is at 16%. Now, one thing that we need to notice is that every single month this year, the absorption ratio underperformed the same month last year because we've got a lot more active listings currently in the market. So even though we had a slight increase in the number of sold properties because we've got so many more active listings on the market, that absorption ratio is going to go down. And if you needed a number that will simply tell you on a scale of 1 to 10, how is the market right now? It's at a 4.3. On a scale of 1 to 10, it's at a 4.3. The historical average is at 6.6. So we are down to 4.3. Thankfully, that is way better than April at 3.82. That was brutal, but we are down compared to last year at 6.08. And this, in essence, measures a lot of different components of the market. It does measure the absorption rate. It measures how fast properties are going under contract. The rate of pendings, is it going up? Is it going down? How fast are pendings going under contract in relation to the previous month? So it takes a lot of different scores, a lot of different measurements, and it simply says, okay, out of all of this, on a scale of 1 to 10, what's the score of the market? It's at 4.3 right now, under that historical average of 6.6. It is 10:51 a.m., you all. Any questions? Any questions, comments, concerns, criticisms, or complaints? Any questions? Any questions? Going once. Going twice. How many open houses this past weekend? Let's go ahead and pull this bad boy up. Give me 1 second. I'm going to go ahead and because I updated the new listing to pending ratio earlier today. So I've got this information right here. Let me go ahead and just make it a little bit bigger for you to see. Let me do this. Let me go ahead and just download this so that I can make sure that it's covering the entire screen, and I'll get you that information. Very good question. Love it. 3,319 open house, and this is where we are right now. Total number of open houses, 3,319. That's where we are right now. Yeah, 3,319. Also, what do you think about open houses going forward since school starts this week? Thinking of the weekend of 8/23. Well, I would do it this weekend. Absolutely, I would do it this weekend. I would do it I don't think there's a bad time right now to do an open house. I would do an open house, absolutely. Plus, if everyone else thinks it's a bad time and I don't, and I'm doing it, then it's a good time because I'm not competing. So, if you're listing it on the 21st, then probably would be hard to do it before that. So yeah, no, 23rd is great. Absolutely. Yep. Yeah, we're seeing good traffic on open houses. Of course, everything is area specific and area dependent, but we've seen really good traffic at open houses. I'm very encouraged with the traffic that I'm seeing out there in open houses. Really encouraged. Good question. Any other questions? Questions, comments, concerns, criticisms, complaints? Any other questions? Going once. Going twice. All right, good stuff, you all. Please take a look at the email that I will send you all with this recording, along with some additional resources. Want to remind you that we've got our broker Q&A contract review training on Wednesday, and then we do have our meeting on Friday. If you have any questions or if you need anything, always feel free to reach out to me. I am here to help and to serve you. Have an amazing rest of your day, and I will chat with you later, y'all. Thank y'all so much.